Hey guys, Tony here. In this video, I want to break down the recent offering last week from Hycroft Mining, a much anticipated dilution to raise capital, something that I've been telling you guys about for at least a year was coming, and that day finally came last week. And then right after they announced it, the next day or 2 days later, they announced an upsize on that offering. And I want to kind of break down how this offering might be different than previous private placement or ATM offerings that you're probably more familiar with, and how I break down the math of this offering to decide if I might be interested in speculating in Hycroft. I had been avoiding it for a year because I knew that a dilution announcement was coming, and I wanted to come in after that so that that risk of dilution was not something that I had to worry about in the short term. So if you got a minute, let's break down this press release, what is different about this offering, and talk a little finance math, and I will keep it easy for you. Let's get right into it. Looking at Hycroft's weekly chart for the last 18 months or so, it's been a volatile stock. And if you are a swing trader, there's been some fantastic opportunities here with a low from $1.63 running up to a high back in 2024 of $4.60, a beautiful run up in Hycroft, coming back down after that to the $2 range, and recently running back up to $4.30, another chance to double your money. And for those of you that have been trading it and locking in those gains, congratulations. There was too much risk of dilution and me not knowing when that was going to happen for me to be dabbling in Hycroft, but I might be going forward now that I know that this dilution is out of the way. As you guys know, if you are regular viewers of this channel, when I covered Hycroft's Q1 earnings just a couple months ago, I titled the video Positives and Risks, and I laid out for you in that video why the risk of a dilution was imminent with Hycroft. They simply did not have enough capital to last 12 more months. And so it was inevitable in order to get to the next phase that they needed to raise a little bit more money. If we look at Hycroft's annual operating cash flow, we can see that they are spending roughly $33 to $41 million a year to keep the business running during this exploration phase that the company is still in. If we look at the press release from June 12th last week, the orange highlight here in the middle of this paragraph says that the gross proceeds from the offering are expected to be $43.75 million, and Hycroft will have to pay some small portion of that to cover underwriting discounts and commissions. But essentially what we have here is, in my view, the company raising about 12 more months of operating cash to get them into the next phase. And we'll have to see over the next year if there comes a risk of the company needing to raise additional cash. Too early for me to say that right now, but at least for the short term, in terms of operating cash, this public offering of units should get them plenty of cash to get through the next 12 months, unless they decide to use cash to pay off debt. I'm just looking at operating cash flow right now versus the amount of money that they raised last week. Before we get into the finance math about what is a good price to consider speculating in Hycroft, if that is something that you're interested in doing, let's just cover a couple of key differences in this public offering of units that Hycroft did. Hycroft has an open S3, as I've pointed out to you guys, enabling them to raise money from a variety of different securities, including common stock, warrants, and units, which in this case is what they went with. A unit they define as a combination of one share of stock and half of a warrant. So 2 units get you 2 shares of stock and 1 warrant. Besides those facts, what else do we need to know about this offering and how it might affect Hycroft if you're trading it? Shares outstanding on Hycroft are going to increase, and your brokers probably already reflect the new shares outstanding. As it says here in the offering, the common stock is going to increase from the previous amount up to 37.4 million shares, or 39.3 million shares if the underwriters exercise their option to purchase additional units, which they have up to 30 days to decide that. So we could see 39 million shares as the final shares outstanding. However, we also need to factor in the warrants, which were sold as part of this offering, and that could add potentially in the future, if they were exercised above $4.20, another 6.25 million shares to the float, or 7.1 million shares if the underwriters go ahead and take down that full extra amount of warrants that they're able to buy over the next 30 days. This offering was not an ATM, an at the market offering, and it was not a private placement either. This was a, as it says in yellow at the top, a underwritten offering of 12.5 million units. And the way these type of offerings work under an existing S3 is Hycroft might say, you know, we need $40 million to survive the next 12 months. And they contact a couple of book running managers. In this case, we have in the middle here, BMO Capital Markets and Paradigm Capital Inc. were hired as the joint book running managers, and SCP Resource Financial acting as the capital market advisor to the company. Between all four of them, they said, let's go out to big institutional clients, hedge funds, whoever we can find, and see if there is any interest in buying Hycroft stock and or warrants, what they'd be willing to pay for it, and how do we help you, Hycroft, raise $40 million if that's what you want to do. And they come back to Hycroft and say, we can sell this. We can raise $40 million for you. We got it locked in, but the deal is going to be you need to issue for $3.50 a unit, which includes 1 share and 1/2 warrant. And if you do that, we can sell this. And that's why you see one day an announcement that Hycroft is doing the offering, and the next day it says that the offering is closed, because it's just prearranged. They've already done the work and they know that they can raise the money. They have the clients lined up, and bing, bang, boom, this thing is done. So in this case, we don't need to worry about an ATM slowly grinding the price down like we often see on ATM offerings, where the company is selling them little by little for weeks or months. No, this deal is done. However, I can't tell you, you know, the institutions that bought these shares, I can't tell you that they won't turn around and try and sell them right away, depending on if they see a profit incentive for themselves between what they paid and what the share price is out there in the market. But we don't need to worry about the traditional running down of the price over time like you might see with an ATM offering. Prior to this offering notice coming out into the public, the shares were trading based on the run up of gold and silver at around $4.25 a share. And because it was a dilutive offering, the price got taken down. Also because, you know, these institutions that got this offering got it at a discount, which is very common. See this in many types of offerings where they're prepackaged like this. In order to get the sale done, the companies and the underwriters offer an incentive to big institutions to take the whole offering down in a day. And that is what happened here. So one thing I want to think about for myself is, what kind of discount did they get besides the $3.50 for a unit? A unit is comprised of a common share and a warrant. How do we break that down to determine what kind of discount they got on the shares and what is the warrant worth? And then we can maybe get some rough ideas about, if you're going to be trading Hycroft, what are the big guys in for now, price-wise, and what might make sense for retail traders to be thinking about if they want to buy, hold, or sell this stock. Myself, you know, what is a good entry point if I want to come back in as a speculative buy? I want to understand exactly the deal that these institutions got and what might be motivating them to hold their position or unload it for a profit. Using the numbers that we have here and something called the Black-Scholes formula, we can compute exactly what the discount is the price that these institutions paid for each share of common stock and what the warrants were worth on the day that this deal was signed. Running that math, and please do your own and fact check me and let me know if you come up with something different, but approximate numbers here. Each whole warrant is worth about $1.85, and remember, each unit has half of a warrant in it. So that means that in each unit, half of the warrant value would be approximately 93 cents. Each unit costs $3.50. And if we subtract that 93-cent value of half of a warrant from the unit price, that gives us an approximate implied share price in a unit of about $2.57. So that was the discount, in my best estimation using math, that these institutions got. They got these shares at $2.57, and they got warrants which were worth about 93 cents for half a warrant. Thinking about that share price difference, the way it dropped from $4.20, $4.27 all the way down to $3, that kind of hopefully helps you understand why the price dropped so severely. If you do the math of what these institutions paid for these shares around $2.57, you know, it's not surprising that the price of the stock dropped so severely. In addition to the fact that that is a substantial amount of dilution that they added to the float. So I think, you know, if you want to be a ultra conservative, risk averse speculator, if there's such a thing, a risk averse speculator, you could say that the bottom dollar that these institutions valued the stock at was $2.57. And Hycroft is trading right now at 308 is what it closed at today. So that would be one thing to watch for over the next couple weeks. Are some of these institutions arbing the units that they bought because they got it at an effective price of $2.57, and there's an arb opportunity for them to sell at a profit right now? Are they going to do that? I don't know. That's something to keep an eye on. And maybe if you're really worried about that, you wait and see if the price heads down towards $2.57, which might be a safer place to buy in, a similar price to what the institutions got. There is another number, though, that you might want to think about besides that $2.57 discounted price, and that would be the theoretical X rights price, or TERP, T-E-R-P for short. You can think of TERP as a weighted average of the market value of the shares before the offering, plus the discounted price of the new shares that were added to the float. When I run the calculations on what is the theoretical X rights price, depending if you want to count the number of shares that Hycroft announced or include the extra shares that they might sell over the next 30 days if the underwriters take those bonus shares, we come up with a TERP price in the range of $3.60 up to about $3.80. If the market also does this same sort of analysis, they might see that at $3.08, today's price, that Hycroft is undervalued, and over the medium term, you could see the price rise back up towards $3.60, $3.80, somewhere in that range. This is going to be a little bit of a delicate dance right now in the short term while we wait to find out if there's any arbitrage selling pressure going on versus are the arbitrageurs thinking about the TERP price, and maybe they'll be buying in this current range around $3. I think the fact that it's holding over $3 is maybe some evidence that the market realizes there is some theoretical value, and the price didn't get run all the way down immediately to $2.57. They are way smarter than me, and they have computers which can calculate this stuff instantaneously, whereas, you know, I have a life and I have things going on, and it takes me till Monday to sit down and think about all of this stuff. But, you know, there are a couple numbers there for you to think about. The price that the institutions got with their discount, $2.57, and a theoretical X rights price, which values the shares before the offering and after the offering, combines them, gives you a weighted average somewhere around $3.60 to $3.80. So if you're thinking about speculating in this stock, there's a couple numbers to think about. 257, 308, the current price, and 360 to 380, a possible TERP price that the stock might run up to over the medium term. Obviously, I can't guarantee anything. This is my DD. These are numbers that I'm using as I think about what I'm going to be doing in terms of any swing trading on Hycroft. As you probably know, I did not own any Hycroft for the last year because I was waiting for this dilution to come out and to see all of the details of it. Now we have those details, and now I have had time to carefully analyze and think about everything that was contained in the offering and in the press release. I'm sharing my info with you. Do your own DD. Let me know if you come up with something different. And, you know, what else do we need to think about for Hycroft if we're speculating? We need to think about the price of gold and silver over the remainder of this year. What is it going to do? If it continues to go up, that will be bullish for all junior miners, including Hycroft. If gold and silver prices were to have downward pressure, that would not be good for junior miners, including Hycroft. The other thing specific to Hycroft is we are expecting by the end of this year that they are going to publish a TRS, a technical report that will give us some indication about if the project is economically viable and what the next steps are and what the timeline looks like. It's not a, you know, a TRS is not as exhaustive, it's not as detailed as a feasibility study, which is what I'd really like to see, but they have committed to publishing a TRS by the end of this year. And whatever the outcome of that is, that will also have some impact to the speculative price of Hycroft. It could be good news, it could be bad news. I have no way of knowing right now, but that is something to think about if you're speculating in Hycroft stock. If you guys have any questions or comments about the information covered here or Hycroft in general, I invite you to review my last quarterly update on Hycroft. I'll put a link to it down in the video description where I go through all of their financials. And, you know, leave me a comment or a question down below. I will certainly do my best, and always get your information from the company filings, from SEC filed documents, and, you know, from investor relations. If you can get them to answer questions for you, that is another great resource. I would always go over information published by the company over any information available on social media, including mine. But I did want to kind of give you a breakdown of how I'm analyzing this and the things that I think about. What kind of discount did the institutions get? What does the Black-Scholes model tell us about the value of the shares and the warrants? And, you know, what might be a good price to speculate at? So there's my DD. Let me know what you think. Thank you for watching, and I will see you on the next video.